and the way I have done my business and how I've set my business up. Can that help you? Yes. Absolutely. All right, disclosure's over. Which one protects me? When we're talking about business structures, we have corporations, we have LLCs, we have C Corps, S Corps, we have land trusts, we have, family limited, partnerships, we have limited partnerships. There's all these out there and they can get very confusing, right? Absolutely they can. But I'm going to tell you this, when you're in the real estate business, one of the things that we learned real quick, and here's a great company if you want to use them. It's called Anderson Business Advisors. This is the company I've been using since the beginning. And the great thing about them is they have an 80% real estate investor base. So they understand our business. All right? The other side to it is this, is once you do business with them, you have consulting for life. Is that huge? Huge. That's big. So anytime I need something, I can call them up and talk to them about what I'm trying to do, and they'll give me the education I need without having to pay for it. All right? So write that down. Now, I will tell you this, they're not an online corporation company you're going to spend a couple $100 for to build a corporation. You're going to pay them for the corporation. But the side of it is this. Most real estate investors who open a corporation, it's not correct. It's for a general business and not a real estate business, okay? You need special clauses, addendums, bylaws, and corporate laws in there to meet the need of your business. So that's why we use them. One of the things that I do when it comes to protection is I use an LLC, and I'll explain that because the LLC gives me asset protection. So when I buy and hold a property, I put that property in my LLC. I own LLCs in every state I own properties in, and then I have what's called a blanketed or a mother LLC in Las Vegas. And I'll explain this for you. Smart man. I've paid a lot of money to get that model together. A lot of people say, well, I'll just go incorporate in Nevada and I have anonymity and all this. But let me explain to you something. And this came directly from my legal counsel. That if I own a property in California and I have a corporation in Nevada that owns that property, guess what I lose the rights to if someone sues me in California? The ability to countersue. I lose it. And guess how 80% of all lawsuits are dropped? Countersuit. You sue me, I'll sue you back. Do you want to move forward? No, I'm out because of the legal fees. I lose that ability. So what I do to be legal and keep things right in my business, I have LLCs for every property, well, up to $250,000 in equity. So I'll put one LLC, I'll put as many properties into it until it hits $250,000, then I'll open a new LLC. But then I have a blanketed or an umbrella LLC in the state of Nevada that owns all those LLCs. So I create anonymity because that's the umbrella company that protects them, but I have the rights to countersue and the legal standing in each state because I have that LLC in that state. Did you guys get that? Yep. Okay, good. So should I incorporate in another state? We just talked about that. I don't believe that you should, but there again, that's my business model. Obviously you want to talk to your legal counsel and find out the benefits and really dig into it because there's a lot of people out there selling Nevada corporations, but the challenge you got to look at is it right for you, okay? What is a dealer status? Does anybody know what that is? How many of you don't know what it is? Okay, let's talk about this for a minute. And the IRS, they have a thing that they target real estate investors, okay? And so if you're in a flow-through tax entity, and that taxable entity shows profit on your personal income taxes on flipping real estate, the IRS can label you as a real estate dealer and your taxable income can go up to 38+% a year. You lose the rights for 1031 exchanges and you lose many, many other benefits as a real estate investor. You know what I'm talking about, don't you? So how many do you think it takes to get hit? Once. That's all they need to see is one flow-through profitable gain from a real estate transaction. And if they want to, they can hit you. And that's why when you're flipping real estate in an LLC, you choose to have it in a corporate veil that you can pick your taxable ability in it.